Hi everyone. The name that I wanted to go through today is a name that has been asked about quite often in our Telegram group as well as in our website. The name is Singtel, which is a name that is probably familiar to many investors in the Singapore market. So what I will do is I'll look at its recent financial performance, understand more about its outlook in the upcoming year, and then find out whether it is a name that is worth investing in. The usual disclaimers that the sharing is not meant to be financial advice that is catered to your individual investment objectives and risk appetite. So do speak to a financial advisor before you make an investment. Okay, so for those of us who are following the Singapore market closely, we have seen actually the Singapore stock market benchmark, the STI actually recovering very strongly with the easing of the tariff concerns. So we are now back to close to 3,900 points for the Straits Times Index, actually just within 3% from the all-time high that was reached earlier this year at about 4,000 points. So one of the names that has actually done very well, maybe as a surprise to some of us who are watching this video, is actually Singtel. Okay, it might not be a name that you are following very closely, but I think it is worth noticing that the share price is actually at a 5-year high. Okay, so when I checked, it was at $3.88, and that is actually significantly higher than where it was at the start of the year and also 1 year ago. Okay, so we have seen the share price actually coming up from below 250 just 1 year ago to about $3.90. And you rarely see a lot of Singapore blue chip stocks having this very significant price increase. So what I'll do is I'll go through some of its recent earnings to see what is actually driving this big jump in Singtel share price. Okay, so Singtel just reported the full year 25 earnings. So for Singtel, they have a fiscal year ending March. So this is actually for the 12 months ending March 2025. So what I have noticed here is that the underlying net profit, 2.5 billion Sing dollars, and that is a 9% increase compared to the previous year. If not for some of the currency movements, the underlying net profit would have grown even more at 11%. Okay, the other thing to worth highlighting is that why do we look at the underlying net profit? Because this is the basis for the core dividend payout. Okay, so I'll talk a bit more about dividends later, but I think what we can see here is that with the 9% increase in underlying net profit, that would also help in terms of its dividend payout. So while the net profit increased even more significantly to 4 billion, that is because of some of the one-off divestment gains that it saw in the fiscal year. But I think for me, the most important here is the underlying net profit because that determines how much dividends I can receive as a shareholder. If I look at the revenue, it was stable compared to the previous year. But if I were to look at the operating profit, that actually grew very strongly at about 20% to 1.4 billion Sing dollars. The regional associates also did well, increasing its contribution by 4% to 1.8 billion. So I think one point that's very noticeable about Singtel is that while we have known it as a very dominant player in Singapore's mobile industry, actually more than 70% of its profit actually comes through from overseas businesses. So that's something that I will spend a bit more time to go through in today's sharing. Okay, so first and foremost, we look at two of its key businesses, Optus in Australia, as well as the Singapore operations. For Optus in Australia, what we see here is that the operating profit or EBIT actually went up by 55% year on year to 446 million. Okay, so what is driving this increase in operating profit, even though the revenue was just about flat year on year? So we see here that the operating profit increased because of the improved mobile performance as well as cost management. So good performance in the Australian business, and that helped to push up the profit. In Singapore, the profit didn't grow by as much. In fact, the revenue came down 2% compared to the previous year. Okay, so what we see here is that because of competition in Singapore's mobile industry, that actually led to the revenue coming down to about 3.8 billion. Uh, they have still been able to keep the operating profit stable at 833 million, but the growth is definitely not like what we see in the Australian business. Okay, next we look at Singtel's growth businesses. So while the Singapore business and Australian businesses are the businesses that contribute a big part to the profit, Singtel has also identified some of the growth businesses, one of which is NCS, which is its digital services business, as well as 𝗕𝗲𝗰𝗪𝗀𝗀, which is where it houses its data center business. Okay, what I noticed here is that NCS actually did very well with the operating profit up by 39% year on year to 254 million. Okay, so first and foremost, the revenue saw an improvement to about 3 billion now because it was able to recognize some government-related contracts. But at the same time, it also was able to get a higher margin for the business that it was able to do, as well as optimize on its costs, which led to the higher operating profit. For digital infra co, what we see here is that even though the revenue increased compared to the previous year, particularly for its data center business, Nexera, the operating profit actually came down because of the fact that it has to recognize some of the investments into its enterprise platform as well as AI related businesses. Okay, so as a result, the operating profit came down compared to the previous year. Earlier, I mentioned that Singtel has significant contribution coming through from its overseas businesses. So one of the business I shared earlier was its Australian business, but it also has got holdings in companies in, say, Indonesia, Thailand, as well as in India. And what we see here is that in terms of the contribution from the regional associates, it actually increased 4% to about 1.8 billion. If not for some of the currency movements, once again, the growth in the contribution will be even higher, increasing by 7% year on year. So which are some of the businesses that led to higher contribution? First and foremost, I see here AIS and InTouch having a 15% increase in contribution. So that is the Thai business that actually saw higher profit following some consolidation in the Thai telco space. Okay, so if you want to actually find out what is this consolidation, I actually wrote about it previously, and you can find out how this actually led to an increase in profit for AIS and InTouch. Next, we also see improving contribution coming through from Airtel, which is its India associate. So the contribution increased from 466 million to 703 million, which is a fairly significant increase. Where did Singtel not have a larger contribution from its regional associates? We see here Telkomsel, which is the Indonesian associate. So while we have some of the businesses performing better, that is still being dragged down by some of the other associates, such as the Indonesian associate. Okay, so overall, we see that Singtel has been able to achieve some of the targets that it had set for itself at the start of the year. It was targeting the operating profit growth to be high teens to low 20%. Overall, we saw earlier that the operating profit grew by 20%. So that's actually at the high end of its guidance. In terms of annual cost savings, it targeted about 200 million, and that is actually on track in FY25. In terms of the dividend coming through from the regional associates, it was targeting 1.3 billion. So that is actually right in line at 1.3 billion. And in terms of the capex or capital expenditure, the company had actually guided for 2.8 billion of spending. But in terms of the capex that was actually spent, it was slightly lower at 2.4 billion. So overall, it seems like Singtel has been able to meet its guidance, or in fact, achieve the guidance at the higher end of the range, like what we saw for its operating profit. So more interestingly, I think as investors, we always want to look forward. And from here, we can actually understand what is the growth prospects for Singtel like in the upcoming fiscal year. Okay, so earlier we saw that Singtel reported operating profit growth of 20% in FY25. In FY26, which is the 12 months starting from April 2025 to March 2026, is targeting the operating profit to grow at high single digit. Okay, likewise, annual cost savings about 200 million Sing dollars, regional associates dividends of about 1 billion, and capex of 2.5 billion. Okay, so overall, it seems like the management of Singtel continues to be confident of being able to drive further profit growth at the operating profit level. Okay, the other point that is worth highlighting for Singtel is that it has been very active in terms of capital recycling. What does that mean? It means trying to sell away some of the assets that might not be contributing as high returns or may not be contributing as much to growth, and reallocating this capital for growth opportunities, pay down the debt, or pay out higher dividends to shareholders. So previously, it set a target for a midterm asset recycling target of 6 billion Sing dollars. In FY25, it managed to get cash proceeds of about 1.9 billion. With the divestment of Airtel of its 1.2% stake in Airtel in May 2025, that will lead to another 2 billion in terms of the proceeds. So with that, it's actually quite close to already meeting its midterm target of 6 billion. So with that, the company has actually raised its asset recycling target to 9 billion. And what this means is that there can be potentially more proceeds that can then be used for growth, paying down the debt, or be distributed to shareholders in terms of dividends. So this is what we see in terms of its dividends announced. In total, the company announced a final dividend of 10 cents per share, and that includes a core dividend of 6.7 cents and a value realization dividend of 3.3 cents. Okay, with the interim dividend per share of 7 cents, what this means is that the total dividends for Singtel for FY25 is 17 cents per share. Okay, so earlier I shared that why do I look at the core net profit? That is important because that actually leads to the core dividend payout, which in total for FY25 is 12.3 cents. And next, we have the value realization dividend, which is what the company will pay out when it is able to recycle some of its assets and use these proceeds to pay out to shareholders. Okay, so overall, we see that with the increase in the core net profit, it is able to pay out a higher core dividend. And with the divestments, it is able to increase the value realization dividend as well. So overall, total ordinary dividend of 17 cents, which is above its guidance of 16.5 cents. Okay, and the big surprise that actually came through is that Singtel has announced a value realization share buyback program of up to 2 billion Sing dollars over the 3 years till FY28. Okay, so recently we have seen quite a number of Singapore companies announcing share buyback programs. We've seen DBS announcing a share buyback program, which has helped to support its share price. And likewise, Singtel has also announced this 2 billion share buyback program as well. Okay, so the point here to note is that the shares that are bought back will be cancelled subject to market conditions. And with the dividend policy that has been announced, this is overall part of Singtel's plan to be able to drive long-term returns on capital. So overall, Singtel has a three-pronged approach to deliver higher returns. Earlier, I shared the core dividend, which is pegged at 70 to 90% of the underlying net profit after tax. So if the net profit after tax continues to increase, the core dividend may potentially be increased as well. Next, we have the programmatic value realization dividend, which the company has guided to be between 3 cents to 6 cents per share annually in the medium term, and this is really coming through from the divestments of its assets. Then with the 2 billion value realization share buyback program, that would be another means that the company is using to be able to deliver higher returns. Okay, so if I were to look at the share price of Singtel, I shared earlier that it has gone up fairly significantly. So if I were to look at it being at about 380, that is close to the share price target based on what the average analyst has come up with at about $3.75. So from this, it would appear that most analysts are no longer expecting significant share price upside to Singtel after the share price has gone up. So one of the ways that we can think about Singtel share price is to look at the consensus share price target if we do not want to be doing our own valuation of Singtel. So what this represents would be the average target price of analysts from brokerage houses that are covering Singtel. Okay, so from what I see, the average consensus share price target is at $3.75. And based on Singtel's current share price, which is close to $3.80, it might suggest that analysts on average are not expecting that there is going to be significant further share price upside to Singtel. Okay, but the other way that I would look at it would be to look at the upside scenarios, look at the potential risk of Singtel, and to evaluate for ourselves as to what is the investment thesis for Singtel. So hopefully from today's sharing, I've been able to highlight what are some of the key things to look out for and what are the drivers of Singtel going forward. So before we end today's sharing, I wanted to just summarize it once again. So in terms of what I see as the positive drivers, in terms of the guidance that has been provided by Singtel, they expect that the operating profit can potentially grow further in the upcoming fiscal year. And that is something that is positive, given that for a telco business, they are still able to grow the operating profit. On top of that, the company is taking on active capital recycling. We saw earlier that they have raised their target to 9 billion from 6 billion previously. And with the more active capital recycling, as some of these divestment proceeds come in, there is scope for higher dividend payout. The company has also announced a 2 billion share buyback program, and that may help to support the share price. And if I were to look at the total dividend per share of 17 cents in FY25 and the share price of $3.81 as of 30th May, that would suggest a dividend yield of about 4.5%. In terms of some of the risks that I will keep a lookout for, the Singapore business may continue to face competition. Earlier, we saw that the revenue for the Singapore business came down and the operating profit for FY25 was flat compared to the previous year. So I'll continue to keep a lookout for the performance of the Singapore business to see whether there is any scope for improvement or it can potentially weaken from the FY25 levels. Next, we saw that even though some of the regional businesses did well because of the weakness in regional currencies versus the Singapore dollar, the reported earnings wasn't as strong as what it could have been. So once again, I'll continue to keep a lookout for the weakness in regional currencies compared to the Singapore dollar. Last but not least, if I were to look at the price to earnings of Singtel at this point in time, it is close to the historical average, given that while the earnings for Singtel has grown, the share price has also gone up fairly significantly. Okay, so if you want to get the latest price to earnings, the latest price to book valuation of Singtel, the latest dividend yield chart of Singtel, you can go to the Beansprout website where we have the latest valuation charts for investors who are looking at Singtel. If you find today's sharing on Singtel helpful, do like our YouTube channel, share with your friends, as well as subscribe to our YouTube channel where we continue to provide you with the latest updates and insights on Singapore stocks, ETFs, REITs, as well as bonds. Do follow us on our various social media channels, including Facebook, Instagram, Telegram, and do visit our website, growbeansprout.com, where you'll be able to get the latest financial insights.